Hey everybody, good morning. Good morning, good morning, good morning. Dun, 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 dun. Let's see. Take those off. Left my phone in the other room. Huh, imagine that. Anyway, Donald, Dan, Goose, good to see you. Got Thanksgiving coming up tomorrow, so how about today? Regular market day. Regular day. And welcome everybody. Yeah, not awake yet. I'm barely here. I didn't even get through my monster. I was dragging butt today. Anyway, welcome everybody. My phone alarm went off. I picked it up. I did whatever you do, swiped it or whatever, laid it on my chest, and promptly went back to sleep. So, anyway, that's my day so far today. Woke up like 45 minutes later. Uh, oh, goodness. Anyway, so the, I guess, chart of the day. Let's see. Where did that freaking thing go? Cool. There it is. There it is. Swiped it away and then gotta bring it back. All right. Share the screen. So check this out. I've been talking about this. This is ETFs with embedded options selling strategies. All right, we're not just talking, option buying strategies, because that's been a thing for a long time that they, buy options. We've had covered call ETFs for a long time, and those are represented down here. Now, that was kind of a baseline. Those RYLD, XYLD, there's some other ones. Those have existed for a long time. Now, interestingly enough, the whole thing, using leverage to, how many people remember the Great Financial Crisis? Just rewind a second. If you remember the Great Financial Crisis, it was all about using trading leverage and derivatives. And a lot of it was hidden from us. But they were doing credit default swaps to cover they were like lending each other these mortgage-backed securities and wrapping them up and then packaging them and selling them and leveraging them. And it was this expanding market of house of cards, essentially. It was all okay, except it kept growing, and the leverage kept winding and winding and winding. It's okay until the system hiccups. Once it hiccups, well, first piece comes out, can't put it back. There's no peg that fits back in the hole, and it kind of avalanched down. And we had to unwind everything. And, the U.S. government decided a lot of the bigger institutions were too big to fail, and we used taxpayer money to try to put, toothpicks into this cascading house of cards. Rock along, this kind of unfolded back in the, we kind of got to the bottom in 2009. So rock along 12 years, maybe it's 10 years. And they're like, hey, the thing we used to do, what if we do it in the regular stock market? We get it approved by the SEC, and we use their money to do it instead of our money. Instead of the bank's money, why don't we use their money to do it? Well, that's a great idea. Let's see if the SEC will approve a couple. They approved a couple. Started doing it. Cool. A couple more people caught on. Like, hey, this is working. We're making money with this. They make the management fees, right? Let's ramp it up. Think about it. If you got $5 billion in this and your management fee is, look, we're talking about billions of dollars. $5 billion, your management fees, 1%, 2%. Some of these crazy ones, we'll look at them in a minute, get even higher, 3%, 4%. 4% of $5 billion, that's some significant money. But what if it could be 5% of $100 billion? Now we're talking about billions of dollars. 3% of $1 billion, $100 billion. I mean, 3, 4, I mean, 2, even $1 billion. Look at the growth of this thing. This is our money in these things. Now, which ones am I talking about? This is CONY, TSLY, all these crazy option strategies, all these leverage things. They go in here too. This is getting crazy. We haven't quite got exponential. If we do go exponential, this might be the house of cards that pulls it apart, like from the inside. This is our money, and $100 billion could get vaporized out of the market pretty quickly. This is, it scares me because they're legally allowed to do what they were doing during the Great Financial Crisis, and they're doing it with our money instead of their money right here and just collecting the fees. And they can charge whatever they want to. Like, not only is it the stated management fee, but it's also the costs they can take out, you know. So y'all can let me know what you think of this, but it's kind of scary. This is the, you know, one of the risks in the market that's hanging out there that nobody's talking about, as far as I know. Kind of scares me right there. And of course, all trading involves a substantial risk of loss, and that's what we're talking about right there. Substantial, significant risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling or trading any financial instruments. So no stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. Don't long them, don't short them, don't trade them. Just don't trade, all right? If you can't handle it. If you know what you're doing, you can control your risk, cool. If you don't know what that means, don't freaking trade. And if you desire personal financial advice, it's not what I'm doing. Not telling you what to do. You know, no prediction I ever make may ever come true again. That would kind of suck. That's what I do. But Jim Cramer seems to do all right, and he didn't get crap right. So if you need personal financial advice, though, you got to hire and consult a financial advisor. Be careful out there. We had the Fed meeting notes came out yesterday, and we kind of got that spike into the end of the day. That was pretty nice, I guess you might say. It was FOMC me notes came out right at 2 p.m. Caused that going vertical right in the end of the day. Anybody see that? And then today, got all this stuff hitting the market this morning. Unemployment claims, core durable goods, preliminary GDP 1.9, coming in a little higher. Hey, pretty good, I guess. Chicago PMI coming up in about 20 minutes. And then this one's an interesting one. Why are they doing this during the market hours? That's a weird one to me. That is not the way we usually do this. Now, when they flip-flopped CPI and PPI, the market went a little crazy because the numbers were kind of surprise. Why are they putting that out during the market hours? Usually they put it out in the pre-market. That's some funny business right there. Causes me concern. Just throwing that out there. Be careful. Might see some monkey business here today. And tomorrow, of course, happy Thanksgiving to everybody. Thank you for being a subscriber. Thank you for watching this right now. Thank you for following. I mean, I'm a content creator. That's what I do. Good, bad, or ugly, you can say whatever you want to about me. You know, guru, blah, 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 blah. But bottom line, it comes down to I'm a content creator. I create financial-based content. You consume it. You follow me. And thank you. That's what I do for a living right now. And thank you all for doing it. I appreciate everybody. This is we're coming up on my 4th year done being a guru. I mean, that's getting close to 10% of my life I've been doing this. Craziness. Anyway, rapidly getting to be 10% of my life I've been doing this financial guru thing. Friday, half day, and it's really weird. It's really weird on Friday because so the market closes regular today, 4 p.m. Regular close for cash, you know, regular the regular stock market. Futures reopen at 6 p.m. just like normal. They close at 5 p.m. Eastern. These are Eastern times. 5 p.m. Eastern close futures. Reopen at 6. Trade till 1 o'clock tomorrow during Thanksgiving. So the futures are open. Close at 1 o'clock. Reopen at 6 p.m. again. So closed for a whole whopping 5 hours. Trade till 1:30 on Friday. And shut down for the weekend. Reopen at 6 on Sunday. So weird. And like I said, so far my account's been chopped up this week. I don't know about yours. Crypto's been a little all over the place, and that's kind of what I expected for Thanksgiving week. Everything's going just like I thought it would. I hadn't really done anything crazy. Just haven't really made any trades. Just holding everything. So S&P yesterday with that little pop at the end. Nice little close. If you missed it yesterday, there's kind of roll back to the right place here. Right where'd it go? Which day was which? 26th. Looking at the 26th. And 2 p.m. We kind of launched off, and it was more evident over here. Yeah, right there. Big tech is what really shot up right there. And look at this. Lower high. Curious there. Curious price action. What does it mean? I don't know yet. That's not the cleanest. That's what I got to say about that. That's 1, 2, 3 up. That's 1, 2, 3 down. That's big. I don't know. Could be a reversal cooking. I don't like it. Is what I don't. I mean, that's what I got to say. I don't like that right there. ES a little cleaner. We actually broke out above that high yesterday, but then couldn't hold it, and we came right back down. Same kind of pattern, but we did get off of this low, which is although that little guy right there doesn't really jive with that. Now this right here, this one being kind of short and this one being kind of big, both hitting the roadmap line. If we go up and make a higher high, that looks like 5 up. Gotta make a higher high, higher than that. Higher right there. But the sucky thing there, how high would that high need to be? Roughly projected somewhere right here would be the target. 60, 56. Roughly right there. That move like that. Here's the sucky thing though. If we do that, it can result in a retrace right back down here before we can do the next move up. So do that, hold in here, and it can hold up here, down here, somewhere in this zone. Higher than this, it's got to be higher than that to maintain the bullish move, I guess you might say. So there you go. I don't know. I don't like it. The biggest problem, the reason I don't like it necessarily, maybe like, well, if you look at this one, same kind of pattern, except it's not. Like, why is it not? that overlaps. Skip one cycle, and that overlaps. And then it's made up of 3-wave things, and maybe that's, I mean, maybe, possibly that's the way it's going to go, but, so throw an alert up here. If we actually go hit it, possibly, could be a 1, 2, 3, 4, that overlaps, which is not good, and 5, and then we retrace it, do a 618 retrace, and then get something bullish. I don't know. It's not very clean. Russell not doing that kind of potentially bullish thing at all. Look at that. 3 down, 3 up, 1 down, sideways crap, maybe a 3 there. That's a lot of 3s, and when you see a pile of 3s, unreliable. That's a it's like, why don't I like it? It's because those 3 patterns of 3s, they can just take a left turn at Albuquerque and just, throw you for a loop, and it's just unreliable. Like, if you've been here following for 5 minutes, you probably know I like high probability patterns. 3-wave structures don't combine to make higher probability patterns, and that's the problem we got cooking right now. And we're sitting at all-time highs. So if you got unreliable price action at all-time highs, what might happen? Down. Oil still churning in the zone here. Break out, we're going up. Break down, we're going down. Tell me something that's not obvious, JT. Probably just going sideways. Just going to keep churning in this zone indefinitely. Maybe all the way out till inauguration. Like, we could just do that out to there. Let's see, where's the January 20th? Right. Wonder if I'll hit that. That'd be funny, right? All right. That's oil for you. That's kind of what I expect. GC, gold. Oh, nice. That was a contract roller. Had to be. So that flush out yesterday may have just been the contract flush out. Or Monday, I mean. This whole thing may have been that somebody needed the price of gold to be down here when the contract quit. Roll over, gap up. Everybody back in the pool. We break out over this high. Game on. That was 3 waves down. So that could be done. And that's 1 2 1 2. Could get an explosive move. 2,900 if we can break back above this high up here. Bitcoin getting a nice little reversal, breaking back through the 15-minute. I'm down to the 15-minute because the daily charts just aren't providing all the evidence I need for what we're doing here. So dropping down to lower time frames. We're right at the breakout time. I gave you this time frame, I don't even remember how long ago. Over a year ago, I think. I talked about how we would get to halving. We would do some sort of corrective pullback. I thought we might even push it down into the 30s. We didn't. We pushed it right to the 40s. And that was pretty deep. I mean, I talked about it. I mean, look how close that got. This was pretty dang, time frame notwithstanding. I got pretty dang close there. And now we're on the breakout period. 220 days post-halving. That was the consolidation period I expected. From here to here. If you're new here, new to crypto, This was the halving event. That's where the payout rate in Bitcoin for miners got cut in half. It'll do it 28 more times for like 150 years before all the Bitcoins are mined out. So got a ways to go on that one. That'll keep happening every 4-ish years for a while. And 220 days post-halving, which is right where we are, is usually when the real run starts. We started just a little bit early, right over here. And you could say we started right there, coming off the lows, but we didn't really start breaking out till right there. Now, we're in the spicy time. Here's kind of my time frame. Sometime between now and October. I probably should pull this back just a little bit here. Let's pull this over here. Sometime between now and October, I expect us to top this baby out. And we're going to go into crypto winter. Sometime right about there. That's when I expect it to be all over. It may end early, it may end a little late, but here's basically where I expect us to start back down into crypto winter. So you've got from between now and here for something crazy to happen, and then we start back down. All right. Crypto going to go up forever? Shoot, no. We're in the hype, all right? Anybody remember anybody trading back in 2020, 2021 when we were in the crypto hype? That's what we're in again, all right? Crypto summer, however you want to call it. Hype, I call it the hype period. We're there. We're there, all right? All sorts of craziness going to happen between now and the end of the hype period. And then we're going to go back into crypto winter. Everybody's going to say crypto's done, going out of business, sucks, can't rely on it, it's not a store of value, blah, 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 blah. All the same stuff. Happens every 4 years. We'll probably do that consolidation. 26, maybe into 27. Then we'll start the run into the 28 halving event. All right. There you go. Ethereum underperforming by a lot. Now, this might get sparky and catch up. We are right at the 618 level on the big correction over here. If we can bust through it, this can start catching up. Got some catching up to do. It'll take us up to 5,900, possibly even 7,000 to really get us caught up here. This thing pop on up, break out, get up here, make higher highs, potentially get an extension. Do I think it's going to do it? I'm not convinced right now. We're not proving it. Be careful. We're still sitting at lower highs. That's a high back in March. That's a high back in July. And that's a lower high right now. So this one's not participating so far. Be careful. Dollar, looks like we respected the resistance so far. Boom, shakalaka, got that one. Right on the money. Next one down, right there. Probably where we're heading. The market may climb while we're dropping the dollar. Maybe not. See. We'll see. NKD, not participating here. Global liquidity not on our side. So we're just seeing effects of the dollar, I guess you might say today, if you believe that's the way it works. All right, so I go to the pre-market. I pull things moving $2 or more up, put them on the gainers list. $2 or more down, put it on the decliners list. I do this in the pre-market before I come on the live show, so it's not updated. So, you know, some of these things may be not performing, like Tesla over here, not on the poppers list anymore. So, MSTR, as Bitcoin turns, so does MSTR. Now, the warning here, be careful. If this does a 618 retrace of this first drop, holds and turns down, we may see it come down to the roadmap line. That's the warning. All right. So here's the warning zone right now. If this continues down a little bit before we pop, that zone pulls down. As you can see right now, that's the resistance. Got to get back up through that to go higher. Now you may say, well, this is a proxy for Bitcoin and it's probably going to rock and roll as Bitcoin goes higher, but I warn you to be careful with that thought process. Look back here. When did Bitcoin make its ultimate high? November. That was way lower. This spiked early, came up shy. They had just started on their selling bonds, buying Bitcoin strategy. Now they're all in on it, changed their company mission and everything to be that way. So, do we top out now and retrace, or we have more to go to the upside? I don't think we're going above 1,000. That's kind of my target area, right in here. A little bit sloppy on it. Right in there is where I expect us to top out if we're going higher. Could it go higher? Sure, it can go higher. I mean, it can go do whatever it wants to do. It could go way on up here, 1,300. 1,000 is kind of what I'm expecting. That's the top out at. Now, that could be the top. Could be done right there, and we go all the way back down, and it just is lackluster the rest of the halving run. MSTU is 2x leveraged. MSTR, back to the options stuff. MSTX. And I said we'd check this one out. MSTY, yield max, option income strategy, based on MSTR. I said we'd talk more about this. So you got to look down in here. Expense ratio, 1%. So whatever they've got tied up, that's what they're claiming their fee is going to be, plus any other management fees and stuff like that. So this is not the full story. That's just the stated expense ratio. Any other fees and stuff they'll take out of it too. So they'll have a real expense ratio and a stated expense ratio. It's like the Bitcoin ETFs have a management fee, but then they also have the cost of doing the transactions fee that they take out on top of that. That's why I'm not a big fan of the like IBIT and stuff like that in the long term, unless you're going to do covered calls or something like that to help offset some stuff. Now, assets under management, look at that number. So that's 1% of the $100 billion we were talking about earlier. So you make 1% on $1 billion. That's like $10, $12 million a year. Not too shabby on some management fees. I'll do this. Heck, I'll start me an option income strategy right there. Yeah, they do amplify the down move, and that's true. So that's why I'm cautioning. Like, imagine the house of cards comes apart. What are all these going to do? And you have stuff like CONY. You got TSLY. It's not just the yield max ones. There's other ones. The yield max ones come to mind as mostly being pretty rough. See, Tesla's all of a sudden shooting up. We're higher than we were up here. This thing was high flying in the beginning. Everybody really loved it. And then Tesla went through a period of choppiness, and now we're back to high flying, but this thing kind of sucking it up here. Had a reverse split. If you adjust it for the dividend, well, that's not so bad. We are actually poking highs. Excuse me. But you had to hold shares. You couldn't, for gosh sakes, don't trade options on these things. For gosh sakes. If you don't understand what they're doing with your money, you should go read the prospectus. And if you still don't understand it, Google it. If you still don't understand it, don't trade it. All right. They're paying part of their paying their NAV. And it's just a wild ride right here. This is like, to me, it's kind of like taking the concept of real estate investment trusts and flipping it on its head and going extreme measures. You know, the core idea of real estate investment trusts, it's a great idea. The way a lot of companies do it to leverage real estate investment trusts is dangerous. And that's why you see a lot of times over time, their value just keeps plummeting into the abyss. This one comes to mind as one that's really volatile and just keeps plummeting down over time. These guys use leverage, and they basically do the same sort of thing that those yield maxes are doing with a real estate investment trust. Highly dangerous. And this is the adjusted value. We take it off the adjusted, this gets even worse. Look at that. Thought these were supposed to be stable income producing. You know, these guys do the same thing that the yield maxes, you know, that the option strategies are doing, except they're doing it with real estate investment trusts. So you got to watch out for these. These, I've learned to watch out for these when they use leverage. And you can talk to me. I mean, I'm not in this to fully explain what yield max is doing. Like, that's not, you know, I can do it, but you know, that's not necessarily my favorite thing to do, to dig into all the nerdy aspects of how one of these is super risky. So, you know, you can take Coiny here and you can go to the website. You can come over here, go to Elevate Shares. You wonder how to do this. Look at that distribution rate, 162%. Look at this thing. This thing's banging, right? Look at this. Download the premium discount. Most ETFs, when you go, it's like download the prospectus. Ching! It's like right there. This one, we're hiding that baby. Let's see. Where's the... Oh, here we go. Prospectus. So you come down here. You got a summary prospectus. You got a prospectus. You need to read these things and see what the fudge they're doing with your money. All right. Remember, this is an advertisement page. What are they holding? Thought this was on Coinbase, right? Got treasuries, 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 more treasuries, more treasuries. Oh, there's some coin. 320 calls. I wonder if that's got to be the number of contracts. Some 300 calls. More government obligations, and a little bit of cash. So they hold about $64 million in cash out of their $1 billion. And they're playing with these right here. 10% of the, that was 2%. Interesting. So go read the prospectus. Dun, 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 dun. So that's how you do it. You go look at this. If you don't understand this, read this and this and this and read that and see what they're doing. Read some of these. See me annual report. And then if you still don't understand all this stuff, go Google and see if somebody else will explain it to you what they're doing. That's NAV is net asset value right there. 1 month down, 3 month down, 6 month down. Think about it. Coin's been ripping the last month. They're still down. And then good. 61% over the year since inception, cumulative. Dangerous. These are dangerous. I don't know about you, but that looks like down to me, but they're doing it on this basis. That's up. Smoking hot. So be careful. And they're not all created equal. And if you've never seen these over here, oops, XYLD. There's some covered call ones. These guys sell options on the adjusted basis to the moon, baby. But you got to hold the shares. You can't play options on these. And but this one, look at this. Russell's at all-time highs, but the Russell yield is not. Not so good. So be careful. They're not all created equal. Not all created equal. All right. Back to what we're talking about. AMBA. Let's look for opportunities here. And remember, if anything I say is helpful, beneficial, something you learned something today, give me a thumbs up, give me, interact, say something in the chat. I do appreciate it. That one, I don't know. Not the kind of bullish price action I'm looking for at this point. There's been a lot of sideways. And we're going to have to break out of this funk before I would be interested in that one. Coinbase. Consolidating right here. If Bitcoin makes its next leg up, this ought to pop. 427, my next upside target. And that comes off of the log scale. Right there. Because log scale looks better on coin. See how it hit right on there? Like it popped up, hit the 1.1448, retraced to the breakouts, extended up to the 1272, retraced back to the breakouts. Next thing I would expect is right there. QMCO. Reverse split. Don't touch this. Dangerous, danger, 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 danger. Reverse splits are dangerous to... They don't just reverse split because everything was going good, okay? They reverse split because things were bad and they were going to get delisted. That's the primary reason. And that's not magically changing the company dynamics. So be careful. It's probably likely to come back down. Companies that have a history of being poorly managed usually continue to be poorly managed. So sometimes a great company experiences a little hiccup and they got a problem. But, and that's, this one might be more of an example. That's where they did good for a long time. Or did okay, I guess, for a long time. I mean, look at the long history of this thing. Go to the monthly chart. Was doing pretty good for a long time. Like, just kind of humming along. Not really growing shareholder value. But then... And see, this started down from here. COVID wasn't the problem. They started having problems way before COVID. COVID just exacerbated the problem. And now they're digging their way back out. So this used to be a pretty good company. They're having problems. They haven't had to do a reverse split yet. But you compare that to this one. This one has booms and busts, right? Like we go on a boom, we go on a bust. We go on a boom, we go on a bust. We go on a boom, we go on a bust. We go on a boom, we go on a bust. A boom, guess what's coming next? Bust. That's the history. That's the way this stock moves. All right, that's why I warn when people ask me about Royal Caribbean. I'm like, I'd consider the exit door. We're gonna have a bust. It's gonna. How many times has it done it? 1, 2, 3, 4, 5. You don't expect us to do it again? 5 times in the past since 1994. I kind of expect it to happen again. Just the way that company works. Right? Company culture is kind of company culture. Doesn't matter. So that one, absolute crap. Cold, ultra short. This is leveraged short natural gas. I'd be careful. Natural gas looks like it's going to pop, which an ultra short, probably going to go down. That's popping back up to the roadmap line. Just be careful. Oh, hey, look at that AEM. I bought that one. I actually bought into this one. Upside target right there at 91. Looking for that pop right there. I played that one, so. Urban Outfitters. Nice pop. There's the high, there's the low. Target 51 at this point. If we get the daily close above this gap down, it did this gap over here. If we can do that, if we can get that daily close right up in here, sets the stage for that little move right there, up to 51, possibly extension up to 54, possibly even higher up here, like 61. It's been performing pretty good since back here in 22. Pretty good. It's not like a super crazy banger, but they'll move that alert up there. I was looking for a deeper retrace, but hey, doesn't look like we're doing it. DPST keeps pushing out. This is leverage on banks. Be careful on leverage. Leverage cuts both ways. 20. We haven't taken back the big drop from Silicon Valley Bank over here. Silicon Valley Bank exploded. We have not taken that all back yet. May not take it all back because, well, it's kind of a declining asset over time. Reverse split, regular split, reverse split. On the whole, that's still a reverse split. That's 20 reverses and only 5 inverses. So be careful. That's actually 100 to 1 on this reverse splits and only 5 to 1. So that's actually 20 leverage right there. Do a 10 for 1 reverse split, 5 for 1 regular split. So that's 2 for 1 reverse split net. And you have to do the math. And then we do a 10 for 1. So that multiplies your 2 by 10. So that's 20. So it's 20x multiplier back here. So it was never 3,000. You have to divide by 20. Nasty, nasty, nasty. Compare that with something that actually does pretty good with its leverage. Like this one, much better managed. Had a little problem in COVID, a little hiccup. But on the whole, this one climbs. So that's a properly managed leverage fund. DKS. Let's remove, look at that support, resistance. We hit it. Yeah, crazy. Crazy. I do have a bigger picture upper target right up here on DKS, 260. Just keep ping-ponging between support and resistance. Salah, Tesla, upside potential. We're sitting in kind of, it's not free air, but it's kind of clear-ish air. We've got these tops that we made back here that we're just shy of right now. We need to go test those. Come on, click. We're just hanging right there between this high, popped above, retested it. Probably going to come up here next. So it's 380 to 420 area. Then above that, we have the 500 target. And FUTU, coming back to the roadmap line, BidX. Potential upside, 70, 80, 120, EETH. Resistance up here at 80, and then 100 above that. SMLR. These guys are doing basically the MSTR strategy now. So wouldn't surprise me to start seeing this explode higher. Resistance 100, 200. NTNX, 79 upside target. That's the one. I bought this one yesterday. Some shares. I was like, that's similar, but not the same chart pattern. 79 on NTNX right there. I bought a biotech. Like, that's how much I got to believe in the pattern here. Think about that for a minute. Like, I bought a biotech. It's not the first time, but I usually stay far, far away. BitU, Ultra Bitcoin, leverage Bitcoin. Be careful on leverage. Yet again. Cuts both ways. ARKB, Bitcoin ETF, ANF, Abercrombie & Fitch. So we're in this downtrend of highs, uptrend of lows, and we're stuck in the middle. This is the primary expectation for now. If we can break out, go higher. If we break down, watch out below. Connell, yeah. 2x long on coin. I do hold shares of this, expecting this pop up here when coin breaks out. That is the high probability pattern. Until coin and crypto starts breaking down, I do expect this to happen. And right there. FBTC, that's Fidelity's Bitcoin fund. Not really anything to talk about. CAMT, that looks like it's going lower, even though it was on the poppers list. SMCX, SMCI 2x leverage. Be careful. This can just flush down the toilet. We already have a reverse split in here. 1 for 20. GBTC, that's another Bitcoin. It's not a trust anymore. This is actual Bitcoin ETF. Reddit, watch for that resistance and a retrace. I would expect it to come back to this area. Look, that high, that high, that high, and we popped up. I kind of expect it to come back and retest that area. I expected it out a little ways, but since we went faster, we may come back faster. ETHT, that's an ultra leveraged Ether ETF. If you wanted some juice on Ethereum going higher, here's one. Oops. ETHU, that's another one. I bought a bunch of shares here. And waiting on this to pop. This will just, how do you figure out the target? You just go to the Ethereum chart. You say, okay, JT expects a pop to 5,000. So we go from here up to 5,000. That's 41% higher. So ETHU with the leverage, maybe 80% higher. But let's be conservative and say maybe only 70% higher. Underperforms. So there you go. 16. That's how you do it. PTIR is leveraged on PLTR. Got to go to the underlying chart to figure it out. And 75 is still the upside target and resistance right there. So on PLTR, how much upside is that? Use the tool right there. It's only like 10% higher. So PTIR 20% if it's 2x leverage, so 20% higher. I mean, that's not bad, but that's only up to 130. Be careful. The juice already been squeezed on that one. PDD. Now, if MSTR drops, MSTX, MSTU, they're going to plummet. So be careful. Think about it. If MSTR, circle back on warning on leverage here. If this is to correct, back to the roadmap line, look at that 50% drop, 2x leverage, holy sugar, that's a 100% drop on leverage. Be careful. Bitcoin, BTC had a reverse split. I don't think you're looking at the right thing. All right, where was I? PLTR, PDD. Broke down below supports. I'm glad I didn't get back in that. That's probably coming back to the bottom. Maybe even going lower low at this point. Nah, good. I wondered if that was the bottom. And it looks like we may go extend it down to 80. TEM. PDD is Temu. Right? For those of you that wonder what in the devil this is, it's Temu, like that app where you buy stuff from China. Funny enough, my mom bought like 200 feet of rope from Temu, and she didn't even know she bought it. It just showed up at her house. She's like, where did this come from? I don't know. I don't know, Mom. How'd you buy it? Anyway, Tempest AI, 84.92. I guess they make it super easy to buy. Oh, go, baby, go. Looking for this to come up and retest this. That was the breakout right here. Look for that to rally up in here. That's a 3xer potential. And if it goes on a breakout, could be on up to 54.66, which would be 5 or 6x. Not too shabby. Let's go, Uniswap. The yen. Uptrend of lows. If we break below it, watch out below. I don't like that chart at all. CWeb. Now, I was expecting these to all hit the roadmap line, and that's what they did. But not turning around yet. Oh, look, MSTY was actually on the list. I'd be careful on that one. BABA. That could be the bottom right there. If we break back above the roadmap line, this might go again. Might be a good opportunity. If we pop above there, could be cruising on up to 123. It's not a confirmation until we're above this consolidation right in here. That one may go again. All right, decliners. Don't touch it. Pop and took that one right back. Look at that. 2-day round trip. Closed up to there. Opened here. And you already lost all your money. Dang, man. That's why you gotta stay away from that crap. W-Day. Probably going on a bigger consolidation. That was 3 up. Probably coming down here. How long? I don't know. It could go fast. Could take a long time. Could take out the next year. Could be there before the end of the year. Might be one to... I might buy a put on that. Just to see. ADSK. Looks like it's coming back to the roadmap line. Dell. I warned about that resistance. Right back to the roadmap line. Now, if it can hold here, this is a buying opportunity. You could buy aggressively here. Stop right there at like 117. If we can break back above here, it's probably cruising on up here, 200. It's like a double almost. Probably like 80% gain on shares. So that's pretty good. SYM. That one's getting hit. Probably going on down. Gonna make a lower low more than likely. Yang. This is 3x bear on China and did a reverse split, and be careful. Boyle, that's a declining asset, did a reverse split, and I know the reverse splits because without even pulling them up, because charts don't do normal splits into that. If it's that and there's a split, that'd be a regular split. That and there's a split, it's a reverse split. That's how I always know. All right. And this chart was going up, did a split. That's a regular split. Did 50 for 1. All right. Now this one, a little different. You have to look at the big picture. That was up, and they did a regular split, but they're way down. And if they get delisted, you're stuck. So be careful on that one. So, MSTR, that was a regular split. It was going up. So that's how I know. Like, and Boyle. So that one's nasty. Declining asset, declines over time. UVXY, that's another prime example of something that almost always just keeps plummeting into the abyss. Reverse split. reverse split, always going towards zero. This one, they even write it in the prospectus that the intention of this fund is to go towards zero. Be careful. CRWD, gapping down. We may come back to the roadmap line before we can gain the energy to break on out. CRM, nice. On the path to go higher. 420 up here. HPQ, back to the roadmap line. NVIDIA, coming back to the roadmap line pretty quickly. ETHD. I bought a put on NVIDIA. Bought a 120 put, sold a 125, and that's why I have an alert right there at 125.90. Only out for a week, but that might go in the money. I'll have to see. So keep an eye on that one. ETHD, ultra short Ether. As Ether climbs, that's going to plummet. Toyota Motors, tried for a break, failed with lower high. That looks like we're going to consolidate. Probably going to make a lower low. Somewhere in this 150 area. ARM. Hey, good morning, Joseph. ARM consolidating here at the roadmap line. If we get below it, watch out for a move back down in the 70-75 area. Bulls not being the strongest here on technology. Looking like we might break back down. D-Dog. Nice pop. Right to resistance. Could extend it to 171. Bonus trade for the day. Yum Brands. Talked about this before. Set it up again. Hasn't made it to the target yet, but right now, the current pattern, 142.99, stop below 130. How long might this take? 67 days on average, 25 trades since 1997, 88% of the time it works, 2.4 profit factor. There's your high, there's your low. Did it again. See, it didn't close above, and now it did. Up there's the target, 142. So $4 upside potential. 67 trading days, which is probably like a little over 3 months. So we got 67 trading days right out. Yeah, 100 days, a little over 3 months. So make sure you have 4 months of time if you're going to play options on that. And the bigger pattern back there, still looking for 146. So looking for that 141 and 146 on Yum. Expectation for the day, for those of you still with me, which is not a ton of people. Lost quite a few. Went a little long. And watch out for the retrace. I just expect chop today. Tomorrow the market's kind of closed. I say kind of because futures are open like half a day. Friday, half day, official. So be careful the next couple days. I'll be back on Friday. I'm going to take tomorrow off. So no stream tomorrow, but I'll be back on Friday. Same bat time, same bat channel. Be careful out there. The account you save may be your own. Remember, it's not staying wrong that costs you the money. Well, it is staying wrong. It's not being wrong. Being wrong, just admit you're wrong. Staying wrong, that's where you lose the money. Staying wrong. Don't stay wrong. Don't double down. Have a great day. I'll see you guys later. Bye for now.